What seems to have been a pattern of phases of instability, we just seem to be in a world of perpetual instability. One crisis, it leads into another, and it just feels like a permanent crisis. So how do we navigate that? What would you be saying to people in positions of power?
The sense of instability is systemic in that it's real. I mean, it's not. And we have continuing huge technological transformations. They change the nature of our world. This has been driven particularly by the digital sector, the digital economy, and right now, artificial intelligence. That's a very big technological shift, and its full ramifications we don't know, but they could be very profound, not just economically and financially, but socially and politically.
This is The Global Gambit.
Good qualifier there. But, you mentioned about Europe and the necessity to engage more in renewables, but I don't think it should be left unmentioned. Von der Leyen, who was one to talk about the idea of nuclear, she voted against Germany's nuclear program. And there's quite a lot of, I know people change their minds. That was quite a while ago. Anyway, the nuclear program is neither here nor there here, because the time it takes us to approve nuclear power stations, that's something that might affect the electricity generation. If we're very lucky, 10 years from now, we can put up wind power, which is the most obvious one for Germany. Solar energy isn't very good, unfortunately, for us up at these latitudes. We can put up wind power much, much more quickly. Now, this doesn't mean that we would be independent of fossil fuels, above all gas, because we're clearly going to need gas generation for quite a while. But we can shift in that direction, and that means we need less gas to stabilize the system because we need it less often. But we're not going to make ourselves invulnerable, and we're certainly, I think there's a strong case for nuclear power, but it's not going to make much difference until the end of the next decade, because it just takes too long. No, for sure. I mean, I'm a proponent of nuclear power because I think that it was demonized after Chernobyl, understandably, but clearly it has a role to play. What about the whole energy transition? Where does this leave Europe? The channel, we mainly talk about Europe on the channel. Is this an acceptance that we're going to have to normalize relations with Russia? As difficult as that may be for some people who feel as they do about Ukraine?
No, I haven't looked closely enough at the gas balances, and a lot depends on relations with the US, actually, which is becoming quite a significant supplier of gas. And whether we want to rely on them, well, that might be a question. But we have survived pretty well without Russian gas. And as I said, you have to work through these things in much greater detail than I'm able to do. But what struck me is how well we managed to adapt to this huge Russian shock. So gas prices will be higher, and oil prices will be higher, and we will economize on these fuels. And most of the way we will end up economizing these things is by changing consumption habits and changing what we produce. The latter has probably mostly already been done. The former can certainly can happen. If fuel is much more expensive when we drive, we will just drive less. Or we will drive smaller cars, or we will drive electric cars. Any one of these things can happen. It will take a certain period to adjust, but that's just what happens. In the short run, we'll drive less. The people will drive less. Heating systems, well, they are gas dependent. I'm not clear. I mean, everything I've seen suggests that Qatari gas is gas from the Gulf, basically, is very important for Asia, but far less important for Europe. So I don't think this is going to prove an insuperable barrier to continued economic growth. I mean, the bigger point is, of course, Europe is a strategically vulnerable continent. It has been a strategically vulnerable continent since the oil age began. We shifted from coal to oil and gas for very good and powerful reasons, and we
used a lot of our gas already, and we have very little oil. So that means we're dependent on other suppliers, and that's just a reality. I don't think it drives us to become completely dependent on Russia. And the strategic imperative for Europe of keeping Ukraine independent remains pretty potent, because who wants Russian armies on the border of Poland and the Baltics? So I suspect we just have to make some tough choices.
On that point, then, I want to ask you a couple more questions. One of the things that's obviously been quite interesting is what gold's been doing, what precious metals have been doing generally. I mean, gold reached a peak of, what was it, 550 or whatever, 5,500. Now it's dropped hugely, but it's gone up again. And so the safe haven of gold doesn't seem to be happening. Precious metals just generally seem to be there. What on earth do you think is going on in the mind of investors, of people watching this from a purely financial perspective? Forget the geopolitical risk.
I think the honest answer is I really don't know. But I think what's going on more broadly is this. People are looking for safe havens. They are recognized that the world is in turmoil, that there isn't anywhere that is unambiguously safe. And until relatively recently, people felt there were some things that were sort of unambiguously safe. The US, and particularly US treasuries, they're just safe assets. Inflation was low, so most bonds, high quality bonds, are safe. And that was shown in interest rates over a long period. It's not just QE. So people felt there were safe assets in the conventional system. But after the pandemic and the subsequent inflation, which was quite a surprise, and then the geopolitical turmoil associated with Trump's arrival, trade war and so forth, and his fiscal policies and everything else, people start saying to themselves, well, what is safe? We want to hold safe assets, but what is? I think they experimented with digital currencies, cryptocurrencies, which shot up. At one point, they went back to gold, an old favorite. But these were driven to extraordinary levels. And after a point, people start feeling this as having, well, they may be safe in principle, but at these prices, maybe they're not. And then, so you've got a situation in which safe assets are either not deemed safe, or if they are deemed in some sense safe, they're not safe at this price. And that leaves people basically in a situation in which everything they hold is an unsafe asset. Everything. And if everything you hold is an unsafe asset, any news can lead you to make very large shifts in your portfolios. And since the prices of these assets have to move enough to get people to hold them, that's the point. There isn't any significant supply adjustment. In the case of gold, there's none. The digital currencies, essentially none. Prices have to move enough to allow people to feel, I want to hold them again. And that, in cases like this, means a long way. So I think it just reflects the desire of investors for something that they regard as attractively priced and safe at the same time. And there isn't anything. And in this context, the fact that equity prices are also pretty elevated, round of it, adds to this sense. Everything is a speculative asset. In a world of everything is a speculative asset, you can esteem that. You can expect markets to fluctuate wildly.
Certainly, but then what does that mean? Why does intrinsic value be applied? Is it just kind of, well, we better,
I don't think we've been in a world of intrinsic value for years. Gold has no intrinsic value. Its value is simply whatever people are prepared to pay for it.
Bitcoin has absolutely no intrinsic value. Its value is whatever people are prepared to pay for it. Stable coins, you can argue, have intrinsic value to the extent you believe they are perfectly transformable into the underlying fiat currency. Dollars, straight dollars, have an intrinsic value as long as you believe that they will remain liquid and the inflation isn't going to explode, but that is a bit of a question. Equities have some intrinsic value, but if you're looking at the speculative end of it, like what are the major producers of AI worth? Well, you're talking about future incomes which don't exist. So their intrinsic value, to put it mildly, not obvious. The point is that the intrinsic value in the market is a very, very subjective concept, to put it mildly, and you can ask if in the case of many assets, it has any meaning at all.
Well, no, I say that because also house prices, at least in the
Well, it's the same with live house prices are determined by what people are prepared to pay for land. It has no intrinsic. The intrinsic value is whatever you think the rental value of the property is, the value of living there. What are you prepared to pay for living there? You can derive that, but how much the market values that depends very often on its speculative view of the future value of these properties, and they don't know. So there are some valuations that underpin the value, but if you look at the ratio, the price to rental value of housing, it's wildly fluctuating.
So as we begin to wrap up for this session, penultimate question related to this then is simply, how much does this depend on the macroeconomic outlook, on what Trump's doing, the weaponization of the dollar, this change? We covered it last time briefly, the idea of a new world order. Do those macro shifts have an influence on these smaller developments like this, or you think?
Yeah, I think the confidence in the future, which ultimately determines what sort of assets you're prepared to hold, how risky they are, and how much risk you're prepared to bear in what you pay for these assets, is determined ultimately by your confidence in the future and what the future will be like. I think the experience of the last 12 months, that's 13 or 14 now, isn't it? We're in the 14th now, aren't we, since Trump became president? Is that sort of anything can happen. And some things have happened which I think nobody expected. For instance, coming back to our early discussion, I really didn't expect Donald Trump to start a war like this, because it looked so much like the sort of war, and it looked so much like the sort of war he condemned utterly, the forever wars we'd be talking about. Now, if you're in that world where the United States looks really like a rogue power, you have to be worried about what that will mean sort of all the time. But you still have to make investment decisions. You still have to decide. And the normal way people respond to this in circumstances like this is, yes, we're very nervous. We will be responsive to shifts. But we think in the end, wisdom will prevail. It will be sorted out. We'll be back to a reasonably stable and predictable world. Because the important point about what we've gone through, even in the last 20 years, it's not, by historic comparisons, world-shattering. The 70s were more disruptive in some ways. Obviously, we've gone through nothing like the 20s and 30s. So that sort of experience is completely remote from people's expectations. As long as that's the case, then people expect things in the back of their minds to go back to or remain normal. The Americans will be rational. The Chinese will be rational. This will be sorted out. Mrs. Steak, it will be sorted out. And that's compatible with its history. Just look at the recent history. We got through the pandemic. It was less bad than many feared, both as a disease and its ramifications. Ukraine, Russia was a real shock also to food prices, not just to oil and gas. But we got through that. It wasn't the end of the world. The world economy continued to grow, still growing about 3% a year as a whole. So we'll get through this. Yeah, it's a disruption, but the machine that drives growth and the innovations that continue to come forward are still very powerful, and people are, to a very significant extent, still betting on those. And I don't think that's wrong. My favorite figure, I mean, the last 70 years have been the fastest growth period in the history of humanity by a pretty long way. And there has only been 2 years in which the world economy shrank. So betting on growth and betting on continuity has paid off. So why not continue to do so? The alternative is to give up all the gates.
Very a reassuring assessment, I guess.
Well, so I'm not saying people are right. Catastrophes, genuine catastrophes happen, and you didn't expect them. And, well, humanity might survive, probably. But who knows? We might get a global nuclear war.
My last point on this is, though, this isn't really even getting into quantum details, AI, the direction that things are going very quickly with that regard. I'm not going to open that kind of worms, but very simply as a last question, what seems to have been a pattern of phases of instability, we just seem to be in a world of perpetual instability. One crisis, it leads into another, and it just feels like a permanent crisis. So how do we navigate that? What would you be saying to people in positions of power to do, or all people who are investing? How should they be behaving?
Well, first of all, I think that the sense of instability is systemic in that it's real. I mean, it's not, and the reason for that is there are several things that are going on that are transformative. I think there are parallels with what happened before the First World War. We have a huge shift in global relative power. That's a very big deal. We have a new superpower, and we're still adapting to that. And that adaptation will continue, but it's a huge shock, and very similar to what happened before the First World War in 2 dimensions, but I don't need to go into that in detail. We have continuing huge technological transformations, and they change the nature of our world. And this has been driven particularly by the digital sector, the digital economy, and right now, artificial intelligence. That's a very big technological shift, and its full ramifications we don't know. But they could be very profound, not just economically and financially, but socially and politically. So that's another huge change. We have some pretty severe environmental issues, and some people will say we're going to start getting really massive shifts, possibly crossing some tipping points, which will affect the global climate very profoundly. Now, that's a very big debate, but this idea of a fundamentally fragile system of polycrisis is not ridiculous if you think of these things together. And finally, all these stresses, along with the declining growth, are destabilizing radically the politics of the world, and particularly the politics of the democracies, which is I actually wrote about this morning. And so the stability of our democracies are in question. Now, if you add those 4 things together, it looks as though we're in a revolutionary period. And if my parallel with the pre-First World War period is correct, well, that lasted for a generation, at least a generation. Actually, I would say it lasted from 1914 to 1991. That was a period destabilized by what happened then, the shifts in relative power and so forth. Now, we've got huge shocks now. Will the results be different? I expect them to be very different, because I think nuclear weaponry basically rules out major war among the great powers as a possible option. But people do crazy things. Look at what's going on now. But it's more likely to be regional wars than head-on conflicts between superpowers, I think. But I don't know. We can't know. Economic disruptions we've seen lots of. Social disruptions are very obvious, and that's shown in Donald Trump's election. So the right thing that's the world we live in.
So how do you navigate this? Well, you can't avoid risk. You live here. And if you own assets, by definition, you're exposed to risk. I tend to feel that the sensible thing for businesses to do is to structure themselves more around resilience than around efficiency than they used to. Resilience is a very important quality of a successful business. Can it survive certain sorts of shocks? Are you thinking through that? I think the same applies to countries. So we've got a big lesson here again. The energy system is very fragile, and we make ourselves more resilient, less vulnerable. If you're, now this is where it gets difficult. If you're an investor, you have to think carefully about, are you hedged against various sorts of risk? How exposed should you be to one class of risk? So the argument, I think, for diversification of portfolios and hedges has become very, very strong, particularly if your time horizon is very short. As I put quite a bit of my money into gold, but of course now it's all gone up so much, they're no longer a very good hedge. But those are all you can do. But ultimately, you live in this world, you rely on what's going on in this world. You can't, unless you're prepared to go, and everybody lives in New Zealand, and even that isn't really safe. I do like sheep. Yeah, but the trouble is, it's a small country and it's confoundable to what goes on in the rest of the world. In the end, you can't live somewhere else except in our world, and it is now a relatively unstable place because the order created by and successful under the US has gone, partly because it's less powerful and partly because it's become fundamentally, structurally more erratic. And so it's a new world order, and no one is going to replace the US. So and so we just live in a different sort of world, which I think our ancestors would have been quite familiar with. But the idea of a completely stable, safe, predictable world order, which was particularly there after the end of the Cold War, was a really brief period, 1991 to 2007, if you think about it. But that was, as it turned out, the exception, not the rule. And we're back very firmly in history.
Wow, quite the point to end on. But as always, a pleasure, Muscle. Chief Economics Commentator. Thank you very much. Pleasure. See you again soon. Take care, everyone.